What's up, everybody? Jonathan Rose, owner of Masters in Trading, and let's do the Friday weekend review. We're going to do the Friday weekend review futures because this week futures were an exceptional trade. Many of you saw that one of our coaching clients made 100 grand this week. He sent me this email, brother, it's raining dollars. I want to go over the exact trade that he did, but also the other trades that we were looking at in our Masters in Futures Facebook room. So here we go. The big trade that we've been doing in the bond futures has been this. ZN, the 10-year future contract, butterfly. We look at the 10-year future contract relative to the 5-year and the 30-year future contract, and this is the chart. When it rallies, the 10-year is getting very expensive relative to the 5-year, relative to the 30-year. On the right here, here's our bond butterfly. We look at the bond butterfly, the 30-year future, relative to the 10-year future, relative to the UB, the ultra. When it gets down here, that means the ZB is very inexpensive relative to its neighbors, the 10-year and the ultra. Once in a while, the stars will align. When they do, there's a really freaking great trade opportunity, and it aligned. And what I mean is, notice how the 10-year future continued to get expensive, continued to rally relative to the 5-year, relative to the 30. Now let's look at the 30-year future contract. It continued to weaken relative to its neighbors, relative to the 10s, relative to the UB. Well, there was a really unique opportunity when the 10-year got really freaking expensive and the ZB got really freaking inexpensive for you to do the trade against one another. You'll notice this is March 27th. You'll notice this is March 27th. Where Luis was able to make so much darn money was because of this relationship revaluing itself. This relationship coming back to a better semblance of value. So that's where a lot of the bond traders were able to make a whole bunch of money this week. Now, it wasn't easy. We got in the trade probably closer to here. And so you continue to fade, continue to stay in the trade, waiting for it to come back. And that's exactly what it did. So great trade. Congrats to all my bond traders who were able to make a bunch of money in this specific opportunity. The other real strong trade of the week is looking at the S&P relative to the Dow. And that's what the chart is in front of you. It's just 1-to-1. So when it gets up here, you just sell one S&P and you buy one Dow. When it gets down here, you buy one S&P and sell one Dow. The most important thing in trading these futures is if you see the S&P relative to the Dow all the way down here, you could do a spread. You could buy one and sell the other. And that's a darn good trade. The other thing that you can do is if you're more of an outright trader and you don't want to do spreads, spreads don't make sense to you, they just don't resonate with you, well, down here, you want to make sure that if you're buying an equity index, you want to buy the S&P. If you're bearish the overall market, don't sell an S&P, sell a Dow. So if you're bullish, be bullish the S&P. If you're bearish, be bearish the Dow. And then when it rallies up here, if you're looking for something to sell, sell the S&P. If you're looking for something to buy, buy the Dow. So as we trade all the way off here, and I love being long the spread. The spread makes a ton of sense to me. Many in my Masters and Futures room want to trade outright. What they want to do and what they're doing is they're selling the Dow on pops. They're selling the Dow when it rallies. If I just put on the Dow, we already looked what the Dow relative to S&P is doing. It's very, very weak. So that means the S&P is weak relative to the Dow. That means the Dow is expensive. So what traders have been doing is they've been trading the Dow from the short side. And yeah, it's rallied, but these are overnight moves. So what they're doing is they're just looking for opportunity to sell. Make some money, looking for opportunity to sell, make some money. Obviously it's rallied, but they're only trading this from the short side, knowing that the Dow is very expensive relative to the S&P. This is the right side to trade it from. Eventually, I do think that the Dow is going to come down, but if you're bearish, don't short the S&P. The S&P is very inexpensive relative to the Dow. Look to get short the Dow. So that's what the guys in the room have been doing. I love this trade. It's been very forgiving. It's giving you opportunity, but hopefully my guys are holding a core short, scalping part of their position, 1/3 of their position or half the position, holding the core short, waiting for a much bigger move. That's a week in the review, guys. That's what we've been looking at in the futures rooms. Thanks, guys.